how do we capitalize on these names going super parabolic? And honestly, QUBT comes to mind, and I was thinking the same thing, and I'm like, is this one of those things? Because if you look at BYND, there were short sellers that were short at $80. There's a famous guy in the author book, but he does like bigger time, like SP500 and all that stuff. It's like when all of the big banks and all the funds are saying that the market should be a short, but the price action shows that it's not a short, like through your price action risk management, he puts on that position. Because when all these funds, 80-90% of them take one direction, and the price action saying, hey, this is not a short anymore, then go. So if somebody puts a gun to my head and is like, yo, find a way to long these names, I would say follow. I would be looking at the funds that are short. Hey guys, I am Masood. I prefer Afghan Rebel. To my surprise, to this day, nobody has been weirded out by my name, Afghan Rebel, but I want to clarify, it's not something weird. It's I used to play a game called RuneScape, and there was that name that just was stuck in it. David Legend, you played RuneScape?
We still do, Budge.
Hell yeah, Rogues.
No, Jack Kellogg, you played RuneScape too?
No, it takes too much time, but I did when I was a kid.
Yeah, I played a bit of RuneScape.
I was addicted to that game. I was low-key, if you guys ever went to Duel Arena and you saw level 113, I was that guy. I had, I think I was like the probably top 2-3%. I had 230 billion GP, which if I had sold it to in real life money was like 100K worth. I would just stake people all the time, being level 113. School sharing is, but that's where the name Afghan Rebel comes from. It's not anything weird. Number two, I have a small little prop firm. A lot of these guys that are on here, they are part of a prop firm. Every Sunday we do a recap, and the intention is to improve ourselves and see the best trades, worst trades, and kind of market sentiment in order to be considered to join. It's like everybody at one point has to have made 7 figures. Didn't have to make that now. Someone's trying to Jordan. I don't know who these guys are. I didn't. Okay. Yeah. So that's a lot of guys in the room. Just so you guys know, without pointing names and stuff, there's a lot of guys that actually make 8 figures. A lot of it is in small cap or short. I generally, from the bottom of my heart, I can vouch for their character massively more. So if you ever want to make friends, whatever, feel free to mingle. And I know everybody here, 99.99% of the time, their mindset is to improve themselves as a human being, as a trader, which I think goes in hand. The other, I've been trading for 14 years. I myself am, I love capital structure and understanding the story behind the capital structure. So who's holding the warrants, and if it's CEO and what kind of stuff they have to do, or if it's management, what kind of structure it is. I like solving puzzles, predominantly. I would say small cap, mid cap trader, but I love crazy opportunity. Just being on the opposite side when fundamental says, hey, this is shitty, but just waiting until price action says, okay, now top is in, and then try to participate. That's it about me. I think we should go from the top. Do you guys see William second and then Adam on our side?
I see Martin after you.
Okay. So Adnan, you just pick people and then we'll go in structure, or maybe go through the people on the left. So I see Adam, Adnan.
Okay. Let's go Jason next.
Yeah, I'm Jason. People call me JJ. I also have been trading almost 10 years, mostly small cap shorting. I use fundamentals primarily for stock selection, but use stats and technicals to execute. Yeah, that's pretty much it.
Okay, let's go Christian next.
By the way, JJ's also Ask Edgar. That bit.
Yeah, I'm Christian. I've been trading for around 3 years now. I was doing e-commerce before during COVID and transitioned to trading beginning of 2022. I traded large caps primarily at first, and recently, maybe more so the beginning of this year, started shorting a lot of small caps. I also trade a lot of breakout beginning of the year, especially during a semi run. But yeah, now I'm really trying to transition more to small cap shorting and capitalizing on that.
All right, let's go David next.
What's up, guys? I've been trading full-time since like January of 2021. I also did e-commerce before I got into trading. Actually, I did trading and then I quit, and I did e-commerce and I quit and back into trading. I feel like I want to be able to trade pretty much everything. I started with OTC stocks, and then I got into small caps, and then I got into mid caps and large caps and options. I like going long and short. I like breakouts. I like mean reversion stuff. Pretty much anything that I can make money on. So I feel like there's stuff to learn from everyone, and grateful to be here.
Thanks. Okay, we'll go Martin next.
Yeah, my name is Martin. I'm trading for over 15 years now, full time since 2020. I'm in the prop firm from Afghan since last year, 1.5 years ago now. I joined, and I'm trading mostly small caps, micro caps, 95% on the short side, but also the big overextension with mid and big caps like MSTR, SMCI, Nvidia, and yeah, this kind of setups is what I like. 95% on the short side as well.
Okay, thank you. We'll go William next.
Yeah, I'm Will, also known as Mango for those who are familiar with that. Been trading full time for 10 years. Trade pretty much everything. For some reason, I'm known more for options, but that's not really the case. Mean reversion, trend, large caps, small caps, futures, all that. Yeah, happy to be here.
Thank you. Okay, we'll go with Jack next.
What's going on, guys? I started trading in 2017, went full time late 2018, and got started doing OTCs till around 2021, and then I transitioned once those died out, and now I just do a lot of NASDAQ, small cap, mid cap, large cap, whatever's moving. And my top 2 setups are swing trading, hot sector breakouts, and shorting stocks, overextension stocks that go up for too many days in a row.
Right.
That's it.
Okay, thank you. Okay, so we'll go to Adam next.
Hey guys, I'm Adam Geffer. I live in San Juan, Puerto Rico. Like most people here, I primarily short micro caps. I do trade long as well. I long about 10%, I would say. And I guess I'm mostly a discretionary trader. I try to find. I also got a capital structure, like who's the big holders of the stock, who has like what traders are trying to do, like why is the stock moving. I usually just look at stocks that are up on the day and try to figure out, if it'll keep moving up or if it'll go down. And I'm looking to improve my technical skills. Like I have mostly a fundamental base. It's like I need to improve technical skills, especially in like a really bull market like this. I think technicals are more important. Whereas if it's more of like a calm market, just not as many traders, then I think fundamentals are more. And I also sell research. Obviously it's whitediamondresearch.com. I also run a room as well, White Diamond Trading, and I publish reports on White Diamond Research, mostly short.
Right. Okay, thank you. Okay, we'll go with Calvin next.
Hi, I'm Calvin. I started trading around 2017, 2018. I'm primarily a small cap short seller, and I do data. So I do systematically, I pull data, and I am also a programmer. But yeah.
Okay. All right. Thank you. Ben, you're up next.
Hello, guys. Can you hear me?
Yeah.
Okay. Yeah, my name is Ben, and I have been trading since December 2020. And I started trading small caps last year, February. And now I'm also full-time trading, and I'm also trying to learn how to long small caps. Yeah.
All right. Okay. Thank you. We'll go with Jordan next. Is he here?
Jordan, he said he's gonna be low.
Okay.
He's
All right. Okay. All right. Chris.
By the way, Jordan is George. For anybody that doesn't know.
Okay. Okay. We'll get Chris then.
What's up, guys? Chris here. I'm sure most of you guys know me on Twitter. I traded since 2017. I started in small caps doing like longs, but I never found any edge. So I began doing system trading on the short side, like most of you guys here. I went full time in 2020 during the COVID pandemic. And yeah, just mostly database, focusing on gapper setups, backside setups, and trying to move further away from front side shorting, which is so dangerous right now.
Mm-hmm. All right. Okay. I believe that's everyone. Did I miss anyone? Okay. Okay, Afghan, should we just get right into it then?
Yeah, but I think one thing that I want to add, just to be very open, we're all brothers. I look at everybody as brothers. Let's try to add as much value, because a lot of the guys are new. I know we're doing goal-oriented stuff, but maybe talk about our best setups, worst setups. Because if I was a trader and I met new people, I'd be like, oh, how would you have this person? What do you think about that?
Okay. Yeah, I think that's good. Okay, should I So we'll do best setups, worst setups then, and then 20, 25 goals.
Yeah, if that's how you want to structure. It's your. I think that sounds good to me. Do you guys? Is there any for the new guys that are here? Is there anything you want that you're like this would be a value add, other than just anybody that's open with their setups? Anything else you guys wanted to see?
I think I'm kind of interested, like, see like what people look at before they get into trade. Because a lot of times I like overlook key steps because I want to get into a trade like quickly, or I don't do enough research first. So that's something like I can kind of go over.
Okay.
Wait, Jack, do you have anything?
Nah, dude. I'm just chilling, really. I didn't really come to, I guess. I'm just chilling on a Sunday, you know what I mean?
Okay, sounds good. Yeah, I feel
But
that's good.
I want to share like some points that I've been thinking about and like get like some thoughts out of me. Like that's my main goal.
We would love that. Yeah.
All right. Okay. I think in order to save time, and we should maybe take out like the weak setups because that's like very subjective.
The ones that you see where they're breaking down, the key to those is that there has to be a big gap to fill below, right? So it doesn't work so well on gaps that aren't that big, or that will structure underneath a gap where there's support or whatever. It works best on the charts where there's like nothing, where there's just air below, and it's like 150% plus type gap.
Okay.
But yeah, the key is that there has to be a lot of downside, because you can't short breakdown type charts unless there's a lot of downside.
What a sexy fucking question, by the way, Jack.
All right. Okay. Any other questions? All right. Does anyone want to go next?
I don't mind going next. All right. So for me, my best setup by far are these big mean reversion multi-day movers, like I know are very popular. Mostly on the mid to smaller cap side. I want to say a lot of these large cap ones are a lot harder to actually short, especially considering they don't get as extreme as a lot of these small caps. And with that being said, also, since it's my biggest setup as well, I'm sizing this maybe 10 times more than I am my smallest trades, right? So they are also my biggest losses. And one of the things I'm trying to work on is just not shorting that front side. Because what I've noticed too is I'll lose a lot on the front side and make a lot of it back on the back side when it does turn. But just reducing those losses on the front side, I'll yield so much more in general, right? So it's just the mistiming of things and just the process of execution, just refining that so I can just mediate the losses, reduce losses to as little as possible so I can maximize it when it does unwind. But with that being said too, I think when I was here last time, I talked about how my entries are really bad when it comes to that day before I get too excited, use too much size, exhaust myself, second day comes, and then I flunk it, or sometimes I do nail it. But one of the main things I'm working on is just waiting for it to actually break that low a day and then wash out all those longs who are just holding the stock as it rips through that multi-day run. And that's what I've noticed just gives me the best win rate, especially if I'm using size, because if I'm using 10 times the size and I'm taking like 2-3 losses that first day with 10 times the size I use in my smaller trades, and then I have to nail it the day after as well with 10 times more size, then I'm just absolutely exhausted mentally and just P&L wise too. So that's also my biggest weakness right now. It's mediating that, which I think I've done a little bit better these last 2 months, month and a half maybe, but just cleaning that up for this coming year. And then also what I want to do too is I know a lot of people really like shorting those small caps, and I've always dabbled a little bit in that, just shorting with smaller size, just 1R. And what I want to do going forward is just risk 2R on that and not risk anything less than that 1R. So kind of moving up my tail end of my risk. And then as those larger gains come in, because those are kind of more reliable singles with the lower variance, just parlay all of that onto those bigger setups when they do come, because those bigger setups aren't very frequent. But if I'm more busy on the, on the single side of, making more money there, maybe I'll feel less inclined to be early on those big mean reversions. But just that in general. And then also just making sure I'm there for those big longs. Like I was there at the beginning of the year for the semis. I did pretty good on the longing the semis and swinging those, like Soon and AMD. I didn't really catch too much from Nvidia, but Soon and AMD I did pretty good at. And then also I missed the Trump stocks, DJT fund. Those are pretty easy swing shorts into the election. Then the quantum as well, which I absolutely missed. But just making sure I'm there for those type of pockets of thematic momentum in the market, and then just nailing that and being prepared every day. So when that does come, I'm not caught off guard. I'm on my toes when that shift does happen and that momentum and volume does come into those sectors. And then also another point on mean reversion side for those multi-day runs is just making sure I'm not piking that big short. Because what I've noticed a lot of is if I am taking losses on the front side and then the backside does come, since I'm in it with size, I'll take it off earlier than I probably should have, just because I've taken so many L's on the front side. So just reducing the L's on the front side, and then hopefully that does help maximize, just the short when it actually does fold. And as you can see here too on PLTR, and I think there's another one. Yeah, NVIDIA, it's terrible early and then taking profits early. That's just a very reoccurring thing in my trading. And those are the biggest setups for me, which pretty much make all the monies. That's just the main points I want to focus on.
Okay. Any questions?
Yeah, I have some questions about it. So like I guess what you're trying to do for the multi-day runners is trying to look for the backside. And I guess what I thought is like sometimes the first backside is like the fake one. It's like and then it goes, makes new highs. So like how do you know when as backside? I'm also kind of interested in these because it looks like you sort of started shorting close to the top. So it doesn't look like you even waited for the backside. Like how did
Yeah, but these are just the Thiggle executions, right? It doesn't show the entire chart that day, right? Like on FFIE here, let me show you. Actually, I did take an L. What's it here? So this is the rest of the FFIE that same day. I tried one time, I was early. Then eventually when it turned, I hit it again. So there's like multiple losses within that same day. The solution I've really found for that is just waiting for that lower day to break. That's when that big washout comes. Like if this broke, let's say 220 and then started to fold, that would be more likely a better timing of the unwind compared to just shorting and then it just grinds higher, goes sideways and traps more shorts and then squeezes up. Just waiting for that actual fold. Even though the average is worse, I can get in with the tighter stop and the trade will be the same size or maybe even bigger if I can have a tighter stop, but my average will be worse compared to trying to, pick the top. But in general, with size, I'd much rather be safer instead of trying to force it in spots where I just think it could turn there.
Right.
And then also for the daily charts, just comparing just what it looks like when it does turn over, how many days, how much gap, when it is that big day that comes, like compared to like, let's say FFIE here, we have the gap that second day. And also like, I feel like there's some discretionary aspects to this. For example, FFIE this day was very sideways, halting up, grinding, kind of below volume, just ticking back and forth. That's not really what you want to see on these big days. You want to see that big push up and then that very exaggerated, almost waterfall, like just to the downside. Like you don't want to see this choppy sideways, halting up and down, like stupidity. And then the following day is that big extension day. And then we get that huge gap, let's say on FFIE, for example, to like, well, I guess it has this, but like 108 or whatnot, right? So just making sure we're not early and then making sure the daily chart is appropriate to short. And if it isn't, maybe just trying it with less size when it's less appropriate.
Right. Okay. I think Kyle asked a question. I don't know where it went.
Yeah, it was mostly just around. I saw you posted a screenshot of MSTR. Was that like was that your biggest win of the year? If you don't mind me asking.
MSTR?
Last month, like the end of.
Oh no, my biggest win of the year was actually soon. MSTR was MSTR was not like it was one of the maybe top 5, top 10. But I think the biggest, it's in order actually. So soon was the biggest. Then PLTR and then Serve and then NVIDIA. But NVIDIA I probably would have made double if I just, did actually lost that day as well and then had to, I was a little exhausted and then tried reshorting and then failed to maximize when that bull waterfall happened.
Okay. Any other questions?
Yeah, I have a question. I think the hardest challenge this year has been not pre-exhausting on the front side on these moves. And a lot of the times we know when the stock is when the stock's gonna top, right? So we know even QUBT is a great example into that $25 level, or DXYZ the day that it topped. Any of these, they go down, they come back up, they clear out, come down, come back up, clear out, come down. And it's actually just been easier to wait for the day that they're going to top and then take a position short overnight. And then as it gaps down and flushes, you add. And that way you're not getting the top. I know Fifi obviously washed out at 2 p.m. That one day, but a lot of these things have been washing out. I notice the next day after they keep clearing everybody out. And another thing too, for me, that has been making a difference, because I've been struggling too with the same thing of pre-exhausting too early this year, is just not being emotional towards it too. And that also is going to help on your covers. When you feel yourself starting to get fucking juiced up For example, you start feeling yourself, you know, you're going to make a lot of money. You have these emotions that are going to make you feel like very excited and very happy. But if you can keep yourself almost quote unquote depressed or sad in the trade, it actually is going to help you stay in that trade a lot longer. Same thing for like QBT. I'll give the example again. The day that it topped at 24, 25, you just wanted to get in as much size as you could. There was unlimited liquidity. And then the next day I was just so pissed off that I was able to short it that 24 and hold it all the way down to 15 and even lower because I was so mad and so depressed because I fucked up so big on the front side. And if you can translate those emotions to just continue to be sad and be upset, you're not going to be covering your shit so fucking early.
Makes sense.
Beautiful insight. I want to add, I do something similar. Ironically, I tell the guys we have Sunday recasts by every Sunday for the past, like, I don't know how long. But one thing I try and do is there's two elements. One element, sticking to the topic, how do you not exhaust yourself on the front side? My personal thing is I need to have a little bit of taste. Like, I think often as traders, if we've been trading long enough, we have a decent idea, like, hey, stock is up 1,000%, it's gapping up. And it always has that one day where it should fade, but then it gives people a really tough time. So the way I get over that and I still have interest in it is I short Black Swan event covered. Because these names, jokingly, I say we're evil short sellers, even though all the guys are fucking amazing human beings. So what I do is I put on a position short through options, and I cover from Black Swan event. I have out of the money calls. So if shit hits the fan, like, I know exactly what my loss is and I can sleep at night. But on the other side, when we have that top kicking in, like, if it's gapped up and it closes near the highs, if you've used a bit of data, you could know that if the stock is super extended, it closes into the highs, the next day after, it's going to kind of fade. But it can still continue. So once I have a little bit of risk on and I'm like kind of watching it, gauging it, maybe like 1/4 risk or 1/5 risk, the next day when that setup happens, red to green, and it's gapping down and it's looking weak, that's when I put on a lot more risk. And that's a stage 2, something I did, I think, like 3-4 years ago. I basically reversed engineered being a noob, where like, I've been trading for 14 years, but there was a period in time at the start where I would get anxious, the position would go against me. So I reverse engineer it. I cause panic in myself when I want to put on risk when the setup is A++. Like, I go with the people that I'm close with, I joke and I'm like, yo, I chat with squeeze balls, do whatever you got to do to cause anxiousness to put on that risk. So create that emotion in you. It's time. Time is ready to go. But you still get a taste. And for me personally, it's a really useful to put on a position and knowing that your max losses, because some of these names can gap up like out of control. It's really hard to determine the risk and the range. If you're covered for a Black Swan event risk, you are very calm, you're level-headed. Shit hits the fan, you just don't touch it. It cancels out, you know? So that's my 2 cents on that. Good talk. That's it.
All right, sorry. So, any other questions?
Yeah, a quick question, actually. I'm trying to get into this multi-day runner shorting, like larger caps and mid caps, because I've been focused on small caps most of my career. So I'm just trying to look at it from like a data standpoint. Are you guys quantifying this stuff, or is it all discretionary? You're looking for a certain number of days of run or percentage from the lows, just something so I can back test.
For me, it's all discretionary. Usually anything like 2-day runner or single day, then gap up. I guess you can quantify some criteria and then run a back test, but it's just mostly discretionary.
I think also one thing that you might be able to look into is, obviously we see these moves starting to extend and open up, and they're multi-day runners, and then a lot of times, like, actually the blow off move will be the previous day, the after hours momentum will be the biggest day ever. It'll have some of the biggest, like, after hours movement, and then the overnight gap might be the biggest as well. So that could be something to kind of look into. Like, the final day, is the after hours movement the biggest that it's been, and is the gap the biggest? It's something we see from time to time. It definitely doesn't happen all the time, but that's typically what I'm kind of looking for to really get me excited about some of these moves. I don't know.
Okay. Any other questions?
For me, it's a bit discretionary as well. But I think roughly a few years ago, I did backtest a little bit, usually at 600 or 1000% within 5 days if it has that extension in a short period of time. Chris, that's when I'm like, I'm trying to look for top hope. That and another variable I tracked. I had to go back. I have a lot of projects on the go with flash research and all that. But another variable I used, I don't know how accurate it is. It's also dollar volume. There was a correlation with all of the super big faders, Kodak, TLRY, all the super. There's a certain dollar volume. I think it was a $2 billion, $4 billion volume. And then that's when it kind of toppled out. And I have a tinfoil hat theory. I'm not going to get into it because it get really long, but it's connected with Armistice Savvy Management because they manage like 2 bill, 4 bill. They only have certain amount of risk and volume they play with. I think those guys are the ones that move all the small cap stuff, in my genuine, honest opinion. And I think you can if you want to really get into the rabbit hole, you can actually backtest the theories. And JJ, me, Dilution Tracker, we can personally don't take it to like as a factual, but we can like we're guaranteed that those guys short ahead of time participate enough because you can like reverse engineer when they participate. And if you look at how much money they manage, they have like Armistice has 70 bill, I think, and they're so involved in small. How the hell? Yeah, they have big cap positions, but I think a lot of them. So they're the ones that are pushing the stuff around. When a stock does like 500 million volume, and
See, just to answer your question about this, like if you have a basically an up day and then a second up day and then a third gap day, it's generally going to close red like 70 to 75% of the time. You could obviously do a little bit more like nuance. How far should you let it spike before you get in? How low should it go before you cover? There's like, you can pull that stuff. But in general, that's why people love these setups because they just close red the majority of the time when you get that day 3 gap up.
Right. Okay. Does anyone want to go next?
I can go next.
Okay. Since no one's volunteering, Ben, do you want to go next?
Oh wait, sorry, I was muted. I said I could go next.
Oh, okay. Okay.
Get some conjunction. Is that okay, Ben?
Yes.
Are you guys able to see the screen?
Yeah.
So overall, my goal has been, to be honest, for the past year or so, to not to trade. But internally, it's because I'm trying to make the profitability better with the locates and all that jazz. But that stuff aside, there are some times that the trade is set up is so good that I have to put on a position, and kind of the best setups very similar to what like I think most of us play the similar setups. Like I love liquidity, man. So if we take a look at CBNA, I don't know the charts. So I develop a thesis through fundamental aspect, and then capital structure fundamentals, and then I use risk management to get in. And I love setups. Some of the guys that were supposed to show up today, by the way, they might still be here. I don't know everybody's name because we don't use Google Meets. They're market makers, and I've always loved liquidity events and having conversation with them. It has only enhanced my love for liquidity event. Long story short, CBNA, I think capital structure is shit. So first thing that they did back in the day, they said they're gonna reduce their debt. And what they did is like if the interest was I think like 9%, 8%, don't quote me on it, but interest was smaller, they made the interest higher and they put the debt smaller. It equaled out to the same thing. It's one of the tricks then. And on top of that, I think they also raised the cost. So whatever customers they have, they're trying to milk more money out of them just to make it profitable, whatever. So that's why stock has been going up and has been publicly has been, I think Citron and a bunch of people were short. And it's always these setups and these things. So that's the variables that I try to look for: capital structure, what's going on, is it shitty? It's not fully shitty because they were facing bankruptcy, but it's still, this is in my books, this is a squeeze. So what setup do I use to get in? And Jack Kellogg mentioned it's like I love getting into the spots where the way I always look at trading is if you can anticipate a range, and if you can anticipate range, very likely you'll make money. You just have to have good risk management. So my beautiful setup that I love is liquidity event on a daily level. So the stock, when you go back, I think the stock was like $40, or I guess it's way lower, $6, whatever it is. I don't use TraderView much, so I'm just gonna assume it's like $6 something. And the stock is at so the stock is at 259. So it goes above the high of the day, 259, and then it goes below. So during these times, I wait. So when we talk out loud in the group, it was like wait until the clear happens, and then you gotta wait until the close below that. So I think when it closed below this or above here, if it's a short squeeze and it's a bubble, it pushes a new high and it either rejects on a candle or it can't push. Risk reward here is freaking sexy. The stock is up from $6 to $260 in like 3-4 months. And capital structure wise, I think it's shit as they're gonna increase in the next few quarters. This is me like anticipating and BSing in my head. There's a chance that their customer people will reduce because they're making up for money, and then they will go back into that toxic structure aspect where they can't fulfill their debt. So whoever gave them the loans and all that jazz, let's say if they were making 150 mil in interest, they're still going to make 150 mil interest because the interest rate went up, but the amount of reduced. So if they can't fulfill those debt and things like that, it will go become shenanigan. So I started a short here, 259.70, 259.76, and thankfully to this day, I haven't taken any profits. And then what I do is I add to the position very much so. So I think my entries was here or here, something along those lines. And the idea here is that it couldn't push above this level. And then on top of that, I don't have EMAs enabled. But on a 2050 EMA, all of them were around 252, 253. So this is a spot. I should have had EMAs here. But just visualize that 10 EMA, 20 EMA, all of them were literally around. So at that point, risk reward is really beautiful. I'm risking 260, 258. I'm shorting in the money calls, equities, and different account and all that jazz. So this is where confirmation is clear. And there's no reason to cover. Like if this had gone back to 244, 247, I would have added more. And one thing that I reflect back on where my strengths are is I'm grateful, I'm very blessed. I have a good understanding of my stock selection is really good. Like AMC, NVAX, all of because of capital structure, I know it's going to do shit. So there's no reason to cover this. Really beautiful, good risk reward setup. And at this point, you can just put on a really, really healthy risk. If you're wrong, this is a 254s, and that's where I was shorting versus 260, 261. And I think it could go all the way down to 200 EMA, which is like 195. But even these points that I'm using as reference points, I have to see a higher high or some form of reason for it to for it to be like, well, there's some trend reversal, and at that point I'll take half off. So this is one of my bread and butter setups. And the other thing I love about this is it's one of those names that nobody's looking at, and we know if you do due diligence, it's a short squeeze. I plan on when I reflected upon my all my trades, one thing I didn't do a good job is why I always tell myself, I'm like, why the heck going into a new shiny object concept? So when a new sector comes in, why am I being involved when I know AMC is shit? I knew back in the day when the stock reverse split just was 24, the management was saying, my strength is understanding capital structure. The management was so full of shit. They were saying, we're not going to dilute anything, blah, blah, blah. And the pieces of poop, what they did is they literally, they sold their options and they gave themselves a bonus. I hope I'm not wrong, but this is the way I read it, the way I saw it. Whatever they should have gotten when they sold their options, they gave themselves a bonus. But when they exercised the option, they took that money, they gave it to the fund. So that was a lot of unethical, shady things. And I always look back and I'm like, why didn't you just keep putting on risk on the micro pops on David? And if you get stopped out, you get stopped out. So I'm going to try to farm this. And I also took LCID. But any questions about this?
I guess what kind of stuff and then annoying, but what got you excited about this op? Because obviously Carvana's up a lot. Everyone's thinking about it. But to me, there was even though it's up a lot over the last couple of years, there was no real speed up in terms of bigger green bars, so to speak. That was oh wow, I should actually really focus in on this, and maybe there's a mean reversion now. I want to be short Carvana as well, but I really haven't seen that.
It's a beautiful question. I think honestly losses at the front side, losses and some gains. So I was short bias on it from a while ago, but because thankfully when you have other things going on in life, you kind of wait for a proper setup. So I just took a lot of attempts at the start, not very large amount of I'd taken profits and things, but all of them were through option realm. And if I'm wrong, I just don't touch it. So it's just a matter of finding the right setup. Does
I
that
have a
answer your question?
question.
Yes, brother Jack.
Yeah, Carvana short is great and all, but in my opinion, like I wouldn't even personally focus on the short. I want to know how can I get long at 10 and sell at 250 because that is where all the meat is. That is where all the juice is in the opportunity, right? So my brain goes, I don't even care about shorting the stock, no matter how big of a fraud it is or how big of whatever it is. How can I capture the next opportunity of buying a stock that is basing sideways after showing a multi-day run that is beaten down from 400 to 10 and for it to run all the way back? And I had a huge position on Carvana at like $10. I just couldn't hold. And it's the same thing as SOUN this year when it based at $4 to $5 after showing it could go on multi-day runs and it's trading relative volume higher than it has traded in the past several years. How can you buy that stock and take it as high, take it high? You know what I mean? And
Go ahead. What's your
that's just what I was thinking, man. So it's like I don't even have like a desire to even short these stocks because as Kyle said too, like it didn't have the 3 green bar extension, but obviously your strength is a lot different, seeing the capital structure and understanding the fundamentals, which I don't have at all. And that is what works for you. And that's good. But for me, that short doesn't make any sense whatsoever.
the liquidity event doesn't make sense? Like it broke new highs and it couldn't when it's like up 600% or something.
Oh, I think that it did that how many times on the run up? You know what I mean? How many times did it create that same pattern?
4 times, 3 times. I think 1, 2, 3. Yeah, 3 times.
Yeah.
And then sometimes I took profit, sometimes I didn't. And by the way, to end exact, I looked and I thought and I tried to find a solution for that. And once I have some time, I think I can look further into it. Unfortunately, bro, it's the evil shorts getting squeezed that cause all these big moves. And I don't know. Like I was short UBT, short swing, and even now I think I covered like 3/4 of it. So what causes these things? Citron was, I think, was short CBNA. And when Citron is short, there's a bunch of these other funds that are with Citron that also shorten. And I tried to reverse engineer. I'm like, yo, let's find a stock.
Didn't you read the report on Citron though? Was it Citron who was shorting huge positions and then put the report out and then he just covered into the drop?
Yeah.
He was, yeah. So
no, this is a tinfoil hat. I think they also have outsourced their position sizing to a firm that like is a quant fund because they do a really good job. QUBT, like that day that they announced the short, I was frustrated because I was like, these pieces of poop. They announced the short, they cover into the wash, and then it's going sideways. And the next day, but forget all that emotions aside. How do we capitalize on these names going super parabolic? And honestly, QUBT comes to mind, and I was thinking the same thing. And I'm like, is this one of those things? Because if you look at BYND, who was short? There was short sellers that were short at $80, $68 to $82. That's when the 3-4 funds announced at the short, and it went to $260. So that's my thought. Do you have any thoughts how you can capitalize on it? For me, it's like short sellers. Go against like, oh, there's a famous guy in the author book. I forgot his name. The top traders. He says he says all of his trades are when everybody's on one side, but he does like bigger time like SP 500 and all that stuff. It's like when all of the big banks and all the funds are saying that the market should be a short, but the price action shows that it's not a short, like through your price action risk management, he puts on that position. Because when all these funds, 80-90% of them take one direction and the price action saying, hey, this is not a short anymore, then go. So if somebody puts a gun to my head and is like, yo, find a way to long these names, I would say follow. I would be looking at the funds that are short. And then when a price action, at what point does the QUBT look bullish? And where can I put a proper risk reward where I can look at 5 to 1, 10 to 1, 20 to 1? That's my take. Do you have an opinion on it, Jack? How do you go along these names?
I think it's the same thing every time. They pop up, they go on a multi-day run, they go sideways, they churn volume in a sideways range. Maybe they break down a little bit. Maybe they break out on like a pre-big level. And then once they clear that big level, QUBT at whatever price it was, SOUN at like 6, 7, Carvana at 10, 11, 12. and then they just break out, and then you just got to do the Qualamagi, trail it with a fucking EMA, man, and they just go all the way up, and you just, how long can you hold? And that, I think, is the biggest, same thing with SMCI this year. That is the biggest edge in the market, hands down. And if we're not spending time learning how to do that and spending time trying to get ourselves in these opportunities, I just don't think that you can fully maximize what trading has to offer you.
Yeah, that's a good point. I think for me personally, the tough thing is, like you said, leaving the trailing stop and letting them run. So like but like or at least I didn't mention at the beginning, I also do long these multi-day runners. But like I'm only gonna be right like maybe a quarter of the time or less. So like the only way to make it work, at least for me, is to have like at least a couple that are those 20, 30 yard trades, you know? And yeah, and that's the thing, is you gotta let it run, make it work.
My question back is, what variables are you guys using? Obviously, hot momentum sector. The sector being hot is a variable. Are you guys looking at short? Like funds are short or not?
I mean, ideally, it's everything. It's great if there's a lot of shorts in it. In my opinion, it needs to be like a hot sector, or at least like if you're gonna long a biotech, ideally you have some other similar biotechs that made some big runs that'll give longs the incentive to just buy and hold that stock. And then also catalysts help a lot if the stock has something upcoming. Like I think like SIDU, which is one I'm watching, has that like satellite launch coming up. It gives another incentive for longs to buy and hold on to it, which is what fuels the move higher. At least that for me personally, it's catalysts, hot sector. Shorts is another good thing if there's a lot of shorts in it.
By the way, I want to give a plug, even though JJ doesn't like it, to his software. His software is really fucking badass when it comes to future catalysts. And I've known JJ even before he had the software, Wallah. And he's always been very good at spotting catalyst once that they're, because before a catalyst is announced, they put it into the filings and transcripts, and then when it comes out, it becomes sells the news. So if you don't have Ask Edgar, I can split the value.
Yeah, and another thing that these multi-day runners do is, if you look at Tilray, for example, or QUBT, they had runs before, like in QUBT ran in 2021 and Tilray 2. And I think these big movers, if they ran before, I think it's worth if you keep them on watch, and then if they do these breakouts out of consolidations again, then you can long them. But yeah, just to have another criteria, if they had done a move before, then maybe they have a higher odds of working out the second time.
What about sizing these two? Because a lot of them have a higher variance because a lower amount of them actually work. But when they do work, it could be a huge trade if you do stay in. So how much do you guys size these compared to something like a big mean reversion trade?
I mean, for me, I feel like it's a little bit easier for me personally to go a little bit bigger on these, because I don't really, I'm not good at mean reversion trades. I don't really feel comfortable going super big as making like a big parabolic move. But when something's just kind of consolidating, it's a little bit easier for me to buy it, maybe wait. Ideally, it's good if the stock tries to break down first and then reclaims, then you have a more clear risk level. But yeah, I feel a little bit more comfortable going big on those ones than like the big parabolic moves, which I just honestly, I don't really trade those very well.
I am the opposite. I think where I am more mean reversion, so I don't take these. I do take the long side once in a while, but when I do, but my risk, like I give it a normal, like 1 hour risk, but because it's not my bread and butter, it's 1 hour. But if it was my bread and butter setup, I don't mind putting on like a 5 hour risk. But because when they work, they just give you such a strong return. My second example was going to be LCID, that I was long because of, again, it goes down to a bit of fundamentals and macro, where we had Terra 4 and blah, blah. But the risk reward was so fucking good that it's like you make a 5x, 10x your risk very easily. So, but I risk 1 hour for me because it's not that better product.
So going back to the CVNA long, if you take a look at something like Soon from December, after the $10 breakout, what you'll notice is that the explosion through the $10 breakout pulls back to the 10 DMA, like which is a fairly tight pullback relative to the range. Does a slight undercut there and holds, then rallies again. Same thing happens on like the 20th of December. And so if you compare that, so like as a personality type, there's a theme, there's a catalyst, there's real volume. And then if you compare it to CVNA, I mean, it was pretty nice when it was heavily in play, and like you can see it in the volume in like mid 2023. But if you're not in from like $10 and just holding with like a super wide stop, there's just, in terms of like a repeatable edge, you're not going to be able to hold it from say $90 to 200 because, well, for starters, 3 of the big gaps in that range were all earnings related. And if you just notice like the size of the pullbacks relative to the range that it actually has, like just looking at one from middle of 2024, it went from 160 to 120, and it was trading like in a fairly tight range. Like unless you're literally holding it with a 30%, 40% wide stop, it's not like the most repeatable edge compared to say Soon.
One conversation that I had with a guy that's market maker's a very loose term, but he buys block orders, and his edge very interestingly revolves around these multi-day runners, and basically he sees who the sellers are, and Bloomberg they say, and he looks at who's the holders and blah blah blah. In terms of repeated edge, he constantly tells me about this type of thing. I don't know if this would be useful for you guys or not, where it has a level, it consolidates, not something like this, but it would break the low, soak up all that volume, they create liquidity, and then they push it. And usually when they do that, that's an indication somebody with a bigger size wants to get a lot more. And there was a really good example on it. ENV.
I mean, if you look at like Nvidia or like SMSI, maybe even Tesla on like before they made the big parabolic move, if you look, I think they all did like that breakdown reclaim type move.
Yes.
There's one right there, but yeah, they all do that. And like, what's his name? Was it Richard Wyckoff? He wrote about it back in like 1920 about like how like every stock is like these operators or whatever, and that's like how they accumulate. And they basically, for a stock to move higher, there has to be as little sellers as possible. So if they have to get out all the people that could potentially sell before they get the move higher, is the same for the downside too. Which goes back to your whole liquidity event, shakeout, stuff like that. Like those always are good. If it has a level that a lot of people are risking off and it breaks that, shakes out, and then comes back, that's a good setup.
Yeah, so I'm pretty sure he's cool with me sharing this, but I think he has a really big position on this. This is his perspective. I didn't follow him on it. He was telling me. So his perspective is that, okay, right here. So this is a very good example. Fuck, I shouldn't. But he was pushing me to get in on this, and I was like, stop it, man, stop it. I'm trying to trade less, but it's very, very cool. He just has so many positions open. So this freaking play, he is telling me he's loaded the boat on this. There's a lot of size. So he has a position. He's long LCID with me. I have a $2 average, and I'll go over why I'm long. And he has a bunch. He's long Rivian, and I'm long Rivian too. And he has a whole battery sector. So for them, it's very different because they have a big amount of capital. So he was telling me this exact same thing, JJ, and this is why I fucking love liquidity, man. If one takeaway that any person that I think is a good trader, I'm like, you should add liquidity event into your books. So this is a grab where they stop out everybody that's here and here, and then look at this risk reward. And this day he loaded up, and it's not him pushing it, but he's been a market maker long enough to know a big push happens when stuff like this happens. So he was really, really encouraging me to put on some risk at $8. And I thought about buying calls, but then I'm like, I'm doing too much. I don't have time. I guess it's
I don't like that whatsoever, because I personally feel that buying liquidity events, as you call it, like clear out events, you're never going to have the type of confidence that you're going to have when a stock trades clean. And for me, I'd rather focus on the stock that is trading a barcode and then breaks out over the previous breakout, and you just get long and you trust it. and it like SOUN or Carvana back at $10 or Fannie Mae earlier this year or even Bitcoin over 75K. It's for me, it's the stocks that are clean are the ones that I want to focus on because I don't want to predict a clear out soak and then rally back up because if I just look at that chart, it's so choppy and it's so annoying and it's nothing that I can have confidence and passion, quote unquote, on because of how gay it is. Like to me, that's so gay that I don't want to trade that. Period. And I still trade. I'll trade clear outs. I will trade clear outs, but I will do that at a small size because they're gay.
Can I challenge you on something, Jack?
Okay.
So this is a clear up, and I fully understand. It's really stupid to buy this below, but on the concept of reclaim, so we understand. I think if we show this chart to like 100,000 people, vast majority of people would say, "Hey, the clear out level was below 820 or something." So I don't think you should buy. And I honestly didn't buy it for the same reason you said, Jack. At the same time, I like to learn and listen. Is what if it reclaims the structure at one point? If it consolidated, like break out of this, or even break out on here. This is iffy, but this here, bro, in conjunction with this, I should have taken if I done a lot of research and I didn't. This here is a bit tougher for sure. If this was consolidated for a month or two and it did a liquidity event and below, and then it reclaimed the structure, that's a nice risk setup reward. 990 or whatever the heck this is versus this is a good proof. And if I show you this, I am a nerd, bro. I freaking love this stuff. Every single one of these things is I don't even like daily chart. I like freaking month. Is it reprove that?
That chart was kind of dirty looking though.
The ENVS?
Yeah. Like that one part you were showing was like that in it, like by itself it looked good, but the whole rest of it was ugly.
I've just seen this so many times, this liquidity event at the daily.
Look at the breakout though. The breakout is so much more beautiful, man. You get long on the breakout and it goes up 2 months in a row. Or is that the monthly chart? It's so clean. The candlesticks are clean.
Yeah, I like when equal chart.
Yeah, I do agree with Jack. I do think, stocks that double tend to triple and, stocks that are strong get even stronger. And I feel like just following that, especially if you get a tight stop and you swing it for a long period of time, is probably a lot easier in most cases, unless you have a very large portfolio and you're kind of spreading risk across a bunch of different names. And, that's a better place to enter on to clear out for that name within a big portfolio. But I do think the opportunity cost of not longing a high momentum stock that's double that could triple compared to longing something that's not moving as much, that's a trade-off it's probably better to long the leader than long the stock that's not moving. I really do agree.
What are we doing for QBT? If we're talking all this long, Yalla brothers, when are we longing? Let's go. Let's take some actionable steps.
I'd say $8 or $9 break or risk a little wide, or maybe different types of stops.
If you go to the daily chart, I can walk through this one very easily.
And also walk me through the past and also the future. I'm trying to get the.
So QUVT first popped up as a no-name bullshit, 60-cent stock, complete bullshit. And it already proved to do a gap up and then continue the next day. So already the stock has proven to be a multi-day run. And then it comes down and then it breaks out again, which is also hard to capture because the stock went straight through the breakout after 3 days and it was on the second green day when it broke out. But once again, what's key is it proved to run 4 days in a row on good volume. And then the stock went sideways and consolidated near the highs, created a hammer candle at the bottom end of the range and came back, or the bottom at the beginning of December. And then when it breaks and has that big green candlestick, you can bet higher odds that the stock is going to go up another couple days or another day at least, because it's already proven 2 times to you that it can go on multi-day runs. And I think buying it on that breakout is easier, thought process is easier overall to get into a big position and stay convicted and be able to make a big return on it. Even if you had bought the stock at 10 or 11, the next day you sell it at 14, 15, 16, and you're making 50, 60% overnight. And you could do it basically on the max size because it's max liquidity. You could have bought in 100, 200,000 shares. It doesn't matter. And you could have made $1 million overnight versus trying to buy on clearouts and shakeouts. I'm never going to be able to buy 200,000 shares on a shakeout. You know what I'm saying?
What would your risk have been And where would you have bought it in here? This is obvious to me. This is a cleaner level to buy off break of that. Or what?
Yeah.
What's your opinion?
You would have just had to buy it at some point during that big green daily chart day. Looking at the daily chart, it doesn't matter where you buy it. Maybe you buy it at 8, maybe you buy it at 9, 10, 11, 12. All that matters is you're buying it and you're swinging it into the next day because it's proven to be a multi-day run, or it's proven to be a hot sector breakout in a multi-day runner.
Okay. What's your risk?
Risk is a fucking gaps down. You take a loss.
No. What do you risk off of a level, or is it a percent of like? How do you go walk me through your risk? What is it? Is it like a whatever position, 30%, or is it based like when you're entering?
My risk would be that I bought it that day and swung it overnight, and then the next day it doesn't go up. That's my
A
risk.
risk low of day, huh?
Would you risk low videos? I guess what I'm asking. Would your risk be that wide?
I wouldn't know what my risk was because I would just buy it with the conviction that it's going to open up the next day. So if the stock opens and it doesn't do shit, then maybe I'm selling at 10, maybe I'm selling at, I wouldn't sell it below. I would stay long above red to green or a little bit above red to green, but maybe it gaps down 20% and I get cooked, or maybe it gaps down 5% or 3% or whatever it is and I sell. But I'm not trading based on that. I'm trading on the conviction that the stock has proven to run, if that makes sense.
So your bet is the gap up. If it's not a gap up, if it doesn't gap up,
Yeah, if it doesn't gap up. Yep. And then you do your best to stay long all day and sell it. Because if you look at the stock, it closes towards its highs a lot of the times. It only didn't close towards its highs one time during the multi-day run, which is that top candle when it gapped down before December. The one candle over that day right there is the one day it didn't close near its highs. So in my opinion, I think this is where all the edge is in the market right now.
Had you bought this at, let's say, the break of 920, whatever, 950, and then this had closed at 960, would you still swing it? Or it closed at 920 at your average? Would you still swing? Did it wick and close back? Or would you be like, you have to have a bit of room?
I probably would downsize some, but
I got you. Okay, that makes sense.
Yeah.
Very similar to white short term. I'm gonna quickly go over. Adnan has to go. So LCID, I was long because of open interest is a very cool concept. If you guys don't follow it, I would strongly recommend it. Open interest you can use as a resistance level, and all these names and AMC whatever, you'll see like 1,000, and then all of a sudden you have 200, 123,000 open interest, which means so the stock was going consolidating sideways at $2. If you look at LCID at around this time, and what happened, my thesis on the long, I have like a 2 average on this, 220 on the Trump was saying about tariff wars and all that jazz, and EV was going hot sector, and what I saw this in conjunction with open interest without taking a lot of time, all of the other open interest was like 1,000, but then you had 3 months down the line, you had 46K, 33K, this on 121,000, 22,000 open interest somewhere here. Yes, I don't know if I do the screenshot of that, but there was a put at 122. Basically, there was like 25 million shares of open interest, and the stock was consolidating sideways and all that jazz. So I just took on, I sold a bunch of puts, I got long equities, and I bought like $3-4 calls, because also 1 year out, I saw somebody that had 60,000 calls or 50,000 calls 1 year from now, and it was like $4 or $5. So I just joined them and I got lucky, and then position is up. So that's how I look at option. It's not my clean edge on this. I do strong offerings, which is another, but this is it from me. I'm gonna hand it back to Adnan.
Okay. Okay. Thank you. Okay. So I'm gonna go next, and what my best setup or greatest strength for the year was that it's not something that's technical, but rather than it's kind of group psychology mixed with technicals, in the sense that one thing that I've been really doing more and more of this year is that when the cycle shifts and you get big huge runners intraday, like these big, I guess, supernova type moves, one concept that I've seen being repeated over and over again was the concept of like failed replication. So, some new theme will pop up and progressively over the course of a week or 2 weeks or 3 weeks, however strong the catalyst is or however strong that initial runner was, that the moves get weaker and weaker. So, what I was really focused on this year was that when those cycles begin to shift and get weaker, that should be the time where I'm risking the most amount of money, even though it seems a bit counterintuitive because the range is so wide. So like the perceived risk is higher on trades. But what happens is that's where the deepest fades happen in small caps. So it was more so a position sizing thing for me that I can't necessarily show on a chart. Yeah, when the ranges really balloon up and you're starting to feel some relative weakness in the cycle, that's when, the opportunity to really boost your P&L arises. And I think in the past week we kind of saw that in small caps too, where I think it was 2 weeks ago it was super strong, and now things are beginning to fade, but the range is still there, right? So if you're able to minimize your losses when things were really really strong, and then uh if you're able to add more size or be in a position where you could add more size, then you really get to see gains that are 2-3 times what you would normally see just because of the elevated range. And if you can add a little bit more size, you really get a big bump up in your P&L. So yeah, just to recap, it was just about staying not drawing down huge when a strong small cap cycle happens, and then once the tides begin to shift, really adding risk and taking advantage of those higher ranges with the added higher probability of it fading. I think that was my main focus for 2024. But then going into 2025, my goal is to begin to get proficient on some of these mid cap or large cap setups. I don't expect it to be a huge part of my P&L, but I just want to start to get more familiar with the whole space and just start to build a foundation there, and not have any huge expectations for it, but at least build a foundation there and slowly get good at certain setups, whether it be, buying breakouts or even getting good at some of these multi-day extensions that has been quite prevalent in 2024. Adding that to my toolkit. So yeah, that's what I had. So any questions or comments?
Are you gonna try to increase your P&L in the small cap, or are you trying to be consistent? Because I know one of the conversations we had where it was getting to a problem where it's like liquidity issues. Are you thinking you're gonna push more at the open gappers, or you're gonna be more consistent with your risk and just put on more risk when a bust setup happen?
Yeah, so a bit of both. So I would like trading like midday plumps was like a decent chunk of my performance. But as liquidity becomes more and more of an issue, I'm probably gonna cut that out or very limit my size on those and just focus on, the most liquid, the biggest gappers. You can still take big positions on. And so yeah, that's gonna be my focus and really size up on the gappers and try to cut out the noise with like midday pumps that have lower volume, and just focus on what can still be scalable, and then at the same time um start like building some competence in different spaces in the markets that have more liquidity, like mid caps, large caps.
How are you looking at your bank management? Are you still gonna try to compound it at an aggressive rate, or is it more like I have to stabilize now?
Yeah, like my biggest goal is just to limit drawdowns. I still want to keep like similar size and just compound like I said at a lower rate now. Yeah, because I really want to control my drawdowns now. And so yeah, but so compounding is not a huge huge goal. It's just about consistency with small growth now. And then when I feel confident after, a few more months or even a year or two at my given size, then and as my skills develop elsewhere, in places that are more liquid, then maybe compound more aggressively um, when everything comes together.
You talk about cycle shifts. Like, what does that look like to you exactly? Is it kind of discretionary, like the range of the moves, or do you have some kind of technical criteria when you kind of change gears?
hmm so yeah, for me, it's pretty discretionary. Like, but usually you see kind of the charts. Like let's say like the first runner that ignites a cycle is something that it trapped all day and then it continued to trap into after hours, right? Typically, like the next day, you'd see something that traps all day again, but then it fades after hours. And then the next one you're gonna see something where it traps all day and then it fades in the last couple hours of the day. So you're seeing like the stock kind of or like you're kind of seeing like the biggest runners start to come starting to fade a little bit earlier in each progressing day, right? And then one and then you start to see things later on in like a couple days just completely come together, like fall off and fade off the open, right? So it's like you slowly start to see the stocks get weaker and weaker, uh, based off of where they begin to fade. So yeah, I call it, or I guess people call it failed replication. But yeah, it's really just progressive weakness, through the week or through a couple of weeks, where the stock starts to fade a little bit earlier than what it did, in the previous couple sessions. You can kind of anticipate it a little bit, especially when it lines up with technicals as well. So that's how I kind of gauge it. But I'm discretionary, so I'm sure there's ways that people try to track it using stats.
Right. Thanks for that insight. It's really difficult to actually quantify, so that's why I'm asking for your input from a discretionary standpoint.
Right.
One of the guys that is active with us, he's fully algo and he's a very good trader. I think 7-figure, maybe 8-figure, and he quantifies it, the market cycle. He goes based on where the ticker pulses at what quadrant, lower quadrant, etc. And when a certain amount of them close at a high quadrant, that it's a bullish cycle, the gappers. Whereas if it's in the lower S, simple, stupid, very effective, I think. For me personally, I have it's hard to say, but discretionary. I like when there's like 2-3 tickers that have gapped up or that have pushed like 2,000% or 1,000% intraday. Usually, day after that, I'm putting on risk for the same reasons that admin. There's so much range, and you have another gapper. If you have 4 or 5 gappers at 50-60%, everybody thinks it's gonna do the same thing. Then you have longs involved, so the range is just much more. So my variable is like the blow off in a macro perspective, if that makes sense. Whenever you have tickers or one ticker or that are doing 1,000% intraday or from yesterday's close, it's a good sign. Unfortunately, short up.
Yeah, I think going back to the reference you were making about the guy that was more quantitative or systematic, sorry, was that he was looking at the top 4 or 5 like runners or the gappers of each day, and he was plotting like which average quadrant they're finishing up like in their range, right? So then I think that's how he was doing it. So he would just take an average of like the top 5 runners and where they closed in their quadrant, whether it was a upper, middle, or lower quadrant, and then based off of that, he kind of was able to map how strong the cycle was.
I agree with Adnan that for me, when it's just like a regular cycle, you'll have some runners, you'll have some ones that fail, whatever, and then you get that big one that rips, gaps up, traps, rips, goes higher, whatever. Then that next day, if you want to short in pre-market, you're going to get blown out. If you want to short at market open, you're going to get blown out. If you want to short, maybe midday is kind of the entry, and then it fades off into the close, whatever. And then each day, that spot on where you want to short becomes narrower and narrower and narrower. till eventually the third or fourth day, 8 a.m. pop and give it all back, right? So it just slowly kind of fades back more and more and more from what I've noticed on cycles that make the most sense. Sometimes there's a cycle where you get a random runner that is kind of like its own thing. Like you'll see like a China scam, or you'll see something go up like drug, for example. And I don't think that sympathy, or maybe no, those sympathies were kind of crazy, but I just agree with what he said. Like the time slot on when to enter, it gets closer and closer and closer.
Yeah. I think Jack's right in that like most of them do fall into that category, in that they kind of get weaker and weaker. But I think the ones that kind of linger around or like have like second pushes are when there's something that's like also running at the same time. So like one that comes to mind is I think in 2020 when all the oil plays were running. I think it was either 2020 or 2021. You had like a whole basket of like all these small cap oil stocks that were running, but they got weaker for a little bit and then they just took a second leg, and it kind of, that one was a really tough cycle. It was tough because oil was also spiking like crazy. So I guess that's just a variable to keep in mind, that like if there's another commodity or instrument that is affecting these cycles, that you have to be careful and not jumping the gun in anticipating. All right. Any other questions?
Jack, do you have any quantitative aspect for market cycle or discretionary?
No, I don't do a lot of quantitative or fundamental shit. All I do is just watch the market and notice the pattern and the cycle of the market that we're in based on what the market is doing and what it's showing me. And it's always flowing and changing. And that's why I personally don't stick to one strategy. I don't stick to one setup. I want to try to flow with the market. There's always going to be a meta strategy, right? At some point, everybody's strategy is going to be the best strategy in the market for that select time. And as time passes, their strategy will go to shit and the new strategy will take off. And the question that I ask and what I try to do as a trader is, how can I follow the market and continue to do the meta strategy of the market?
I saw something very cool, Jack, at you. I thought, I know you're able to do long and short, but I thought you're predominantly an Evo short seller too. But the other day I saw your post and you're like all long, and I was like, what the heck? And you grew the account by a massive percent. Some of the guys in here have done really massive percent too, but you were all long. I was very shocked by that. Was that just multi-day breakouts, or is that someone else?
Yeah, I mean, this year specifically, it's just another cycle, right? And the cycle in 2020 was a similar cycle where a lot of traders had a lot of edge on the long side in terms of frequency. There was a lot of stocks breaking out. There was a lot of stocks gapping up overnight. And it's the same thing during 2020, whatever it is, the election cycle. I think a lot of people this is just my thesis. I have no idea why it works, but a lot of people get excited for new policies. They get excited for new sectors or whatever it is. So when you mix Q1 or Q4, which is already a hotter cycle for longs and for breakout buyers, when you mix that with an election cycle, when you mix that with a lowering rate cycle, the long opportunities, the breakouts, the blatant obvious longs where you're buying high and selling higher work over and over. Whereas in 2022, if you tried to buy breakouts, those are all clear outs and shorts. For example, when Tesla was on its downtrend, it would consolidate and then go try to break out. And then straight from the breakout, it would go all the way back down and it would tank and break down. And it's the same thing, but opposite right now. It creates a range, like you were saying, and then it shakes to break down, and then it just rips faces off. And it's always in some type of cycle. And if you can figure out what cycle of the market that we're in, that's when you're going to make the real money trading.
You don't have a hard time switching from being short to long, or it just doesn't matter at all to you? Like the breakout works. I don't know how you shorted if you shorted breakdowns.
Yeah, I just think if you continue to, obviously when you start doing it, you're going to be in a fucking blender all over the place because it's hard to start managing that type of switching your bias. But the more times you try and the more you learn and attempt to do trying to be very fluid with the market, the more you're going to get fluid with it, right? So I'm still not there yet. I'm not even close to where I want to be, but I think it's the right track because trading one strategy for me, I don't like winning a ton and then absolutely getting smoked and winning it. Like, I would rather always just try to be making some type of money in the market because it makes me feel better as trading and as living my daily life. I want to just be doing what's making money. And maybe one day the stocks don't even have an edge anymore. And it's all this algo bullshit and doesn't make sense anymore. And I need to be open to that too. I need to go where the easiest money is, right? Where is the easiest money that is the most predictable in the market every single day, right now, today, this very week, this month, this day. That's where I want to go and be trading.
All right. That was a good insight. Anyone else want to go next?
And then if you have to go, I can take over.
I can stay for a little bit longer.
Ben, the quiet assassin. I love Ben, and Ben speaks. Just so you guys know, I'm put him up a little bit. Most quietest, calmest guy. I'm not gonna. A lot of value comes when he comes, and he's German, and he looks like Lucas too.
Okay, I can share my screen really quick.
Go for it.
Yeah, you can see my Discord. Okay, so most of my trades are backside trades, and I mainly do small caps. Some charts look similar to what Jason does. I wait for, sometimes it's a liquidity event at the top, like a failed breakout here. And once it dumps and I see a hidden seller, for example, in this case, I can get back in here, and I can have a tight risk thinking that this hidden seller has more to sell, because most of the time on these pumps, they buy a lot of the float and they have to dump it. And when I spot these hidden sellers on the backside, I can use them as my risk and often have tight risk and have good R returns because of that. And sometimes when I don't see a hidden seller, I don't get as aggressive and I wait for higher bounces. Similar to what Afghan does, I look at liquidity events, which are like paid breakouts. And what you often see is that the first liquidity event doesn't work as well. Like here you have the pre-market high. And often what they do is they do like a failed breakout first, a lot of shorts get in, and then they do a second round of failed breakout. And then I usually go in with heavier size. I get in once the failed breakout is starting to work, like here, and then I add more on the bounces. And even here you have that VWAP swipe at first, which doesn't work. And then the second time it comes, I wait for the sellers to start getting aggressive here, and then I get involved. And this is like the main stuff that I do. And I am also trying to get into small cap longs. What I focus on here is that like my entries most of the time close to pre-market high, or where a lot of shorts have their stop losses. And like in this case, this is BTCT, which was a Bitcoin stock. And this happened while Bitcoin was running. So I was assuming that this is like a very strong sector. And then I look for a failed liquidity event. So this is one where the stock does a failed opening range breakout and it dumps on high volume. So you can be sure that a lot of shorts are interested in this one. And the best long setups are usually when a short setup doesn't work. And if you combine that with a very strong sector, you can have long setups. Like in this one, I would try to buy the breakout here, because first you have a lot of stops at the pre-market high, and all the shorts that started piling in after that failed breakout, they probably have their stop right here too. So this is like a long setups that I'm working on. And another one is when the stock is already running, and then you wait for the consolidation. And often what happens is either they break out and they work right away and I'm not in it, or they do like a first failed breakout at first, and then they start to hold and curl back up, and that's when I want to get back in and long the stock. And that is something that I want to participate in strong market cycles. Yeah. Any questions? I can go over another example. NUKK was a strong stock too. So here the stock made a big move first. It went, it looks a bit choppy, but it's kind of a sideways action here. It does a failed breakout here, holds, and then once it rips back up, I want to buy.
I have a feeling, I don't know, Jack or Mango, they probably trade this. Wouldn't a perfect one would be the breakout where it breaks out and never looks back? Or if you wait, are you gonna wait for the, like it does a failed breakout and then goes back up? What will determine that you should wait or should wait the breakout? Or are you not gonna take the first trade at all, even if it breaks
Yeah,
out?
so in this case, I know that a lot of longs are in it. And in small caps, it's often the case that these obvious breakouts, they don't work right away. So I want to only long when I know not a lot of longs are in it. And this would be the case right here, where it looks very bearish at first after that failed breakout here. And this is like a setup that I prefer over buying that Jack Kellogg does on a daily time frame. But yeah, this is like my strengths, and I'm not that good at identifying what Kula Maggie or Jack Kellogg are doing.
Jack, you want to shed some light? How would you buy the long when not this long, the other one? This
And you can wait?
Yeah, the one where it broke the high and then it rejected and then went again.
Okay.
What's the question?
So sometimes when it breaks out the hijack, it does a failed breakout, and then the second time it pushes above it, it continues to go. How do you determine, like, how do you overcome that issue? If you're buying a breakout and sometimes it does a failed breakout for like 5 minutes, 3 minutes, and then it does a second leg and it pushes much higher.
Are we talking about like only intraday breakouts, like the NUKK, SIDU stuff?
Yeah, it's only intraday.
Yeah, for me on those ones, those are never going to be a big trade for me ever because they're already up so much on the day and they're so volatile. And yeah, they might go up a hell of a lot higher, but they also could go down a hell of a lot lower. And you're not buying near any consolidation level that's been consolidating for weeks, months, or years. So for these, I would buy smaller size, and if it went up a little bit, I would be more scalpy with this type of breakout where I would just kind of buy it, and if it went up a little bit, I would just take some type of small gain on it and move on. On these type of intraday breakouts on day one extension runners, I've never really caught one like NUKK or SIDU because I feel like they're always easier in hindsight, but in the moment, I don't predict it. Whereas ones that are consolidating for weeks or months, like I'm way more convicted on them. The problem is just can you stay convicted for days or weeks and continue to hold? You know what I mean? So with these, it's just like scalps for me. But I just try to buy, man, and I just try to fucking sell for a profit. That's it.
Spoken like a true TikToker.
Seriously.
But if a breakout happens and it's a failed breakout, don't you have some kind of risk, or like how do you? That's the part I don't fully understand. I'm not gonna lie. Like if it doesn't fail, should you cut out instantly? Don't you have to have a risk?
Well, I might get in with some type of size. Maybe I buy 10,000 shares of SIDU at 4 or 380 or something, and then it goes up and it comes back down. Then maybe I sell like 3,000 or 4,000 shares just to decrease risk, to hold the core for a real risk level. And then if it re-breaks through the level, then I maybe add even more size than I had originally and risk that kind of low, if that makes sense. I'm just trying to follow the momentum of the stock and follow the price action. But yeah, on a rejected breakout, I'm going to peel some no matter what because it's not that clean and it didn't make it easy for me. So I'm okay peeling some off. And then if it reclaims, then I'll just put some more back on until I eventually get it right. You know what I mean? And I'm not going to sit there all day and fucking do it. But I'm going to give myself a zone and a time frame of when I think it's going to break out. And if it breaks out, I'm just going to try to get as much as I can, and I'm going to fucking sell when it goes up and leave it alone.
So if the first attempt, when you're dabbing into the toes, you said you have 5K, but to get a preference or perspective, the second entry when it reclaims, are you putting like, if the first entry was 3,000 shares, is the second entry going to be like 30,000 shares or 10,000? Or is it still like from 3,000, the next entry would be like 5K?
Yeah, it'd probably be like the double or 50% more, like a little bit more. You know what I mean? I'm not just going to go from 3 to 30K.
Yeah, you were right about me dabbling in this kind of thing. So there's a couple of points, like, and there's no like right answer or anything like that. To start is what Jack said about like you have to grade the level, right? And on the highest level you have like a multi-month breakout, which is like the level's like a 9 or a 10 out of 10. And then, you know, we're looking at SIDU there. You know, that level, that 4 level is like maybe like a 6 or a 7. Like, yeah, it's the high of day. Yeah, it's a name with momentum, but there's nothing in particular about that level. So that's where like the details, like there's other details that come into play. So if you like follow through that chart from say, I don't know what local time zone that is, but say 6:30 to 7:30, you'll notice that it does like that little undercut. But so within an uptrend, then like pulls up, then has like a wee undercut. So you're looking for like hints as to what is going on under the surface to use in conjunction with like a small lower graded level. So say I was trading this one and I thought it would go up, I wouldn't just like blindly long $4 there. But the level in trade just simply isn't good enough. But I might be long, say I wanted to long, like let's just say 10K shares. I might be long like 2K from 360, add 4K from 380, maybe add 2K on the first $4 break, and then get like way oversized after the stuff from Reclaim. Does that make sense?
Yeah. So the undercut you are talking about is this one here?
Yeah, that one there. Yeah.
Okay, cool. So it's important to have like a bigger picture in mind.
Yeah,
This
very
case, it
important.
could be like a strong sector or a hot market cycle. And yeah, so you have like multiple intraday setups then, right?
Yeah, exactly. And every now and again, you will get like it's a general theme that small caps do tend to fake breakout, and I mean you talked about that. So like there's that chart Lance posted on Twitter ages ago, VVOS, that he got a lot of shit for.
Yeah, I know this one. Yeah.
But that one was one that would work. Like the people who say he doesn't know what he's talking about, like they literally don't know what they're talking about, because there was one where you just buy the level. And like, level 2 comes into play. Like you see how tight that is, and then it does.
Oh, I see.
And you
It's
see,
the undercut too.
yeah, exactly. Yeah. Like it, you know, and it even has like that equivalent of the 380 level before 4.
Mm-hmm. This one is has better levels, I think, because you have multiple lower highs. Yeah.
So I guess the sort of thing is like when you've got like a multi-month breakout that lines up with a daily level, you can literally just set a buy stop above the level, sell stop below for your stop, and just like play it like that. But whereas when you get into the final, like the trying to force a day trade every day type thing,
Yeah.
you have to be more detail oriented.
Right. I know that last year, when I like started with small caps, there was CXAI, and this one had the pattern that Lance talks about often too. Is flags where you buy the breakout.
Beautiful. And even like see that CXAI there.
Had multiple of these.
Yeah, that's go up to the one at 450-ish.
Yeah, sure.
So notice how the little stuff it did to like 520. Notice how that then held like around 480. So like
Right.
So like it's not just about you know buying above the level. It's also about that. There's that whole, as I say, like the details matter.
Yeah.
The fact that it held there is like quite in terms of like the structure, adds a whole layer of confidence to it.
When I used to long these mango, I would risk the low of that structure, so that when you buy the breakout, risking the
Yeah,
low.
and sometimes you're gonna get faked out, like you know, just that's life.
But if the white is like, I feel like stopping off for the previous low structure, you won't get faked out as much. So we do the same thing, I suppose, right? Even if it's a fair breakout, just risk off of a level with previous candle where
I
started.
I trade these not too often because getting slammed on 20 or 50K shares is not pleasant. But yeah, I definitely do trade them.
Ben Fignati, do you have anything else you want to mention?
No, that's it.
Can you pull up QUBT? I want to, while everybody's streaming, we're talking about long. I would love to get Mango and Jack and anybody else that longs. Like, how would you guys long this thing? What would the long levels be here? I love actionable stuff.
Jack nailed it for me. The one thing I would add, go to like the hourly on QUBT.
No, I'm talking about the future. We talked about the past.
Oh, right.
Let's talk about the future. I'm trying to get some trade alerts here. I'm trying to pay for you guys' service. I want to see service I gotta buy.
There's no way this fucking thing's gonna go higher, man. I'll fucking be besides myself if this thing goes higher.
All right, but
Yo,
let's say
that's an indication it could go higher.
let's say that does though, because you know we want to watch. Yeah, you can put up an hourly if you want to.
Yeah, we should talk about scenarios where it could.
So like essentially, if this goes up again, which I also don't think it will, but you need to see essentially what happened in that last consolidation period, which is like a push higher, a fail, then like essentially an undercut to the downside, which holds, then like a low volume sort of grind higher, and then subsequent explosion. So to essentially look like some sort of super ugly flag. Yeah, it'll look like that, which is pretty ugly, right? Except for the details that Jack mentioned.
Yeah, I just think if you see the stock trading over 25 into the close one day, it's probably gonna go 30, 40, 50.
Exactly. That's what I was thinking. I was debating either it's going to be 22. For the record, I am still short QUBT, and I got a really good average. I did the same thing. Started like 25 something, and the next red day I hit it. But I covered most of it. But right now, I don't like the hold. So I guess what I was thinking out loud, and I wanted your guys' opinion, would you wait at the 22 level, like going to the daily chart, or would you wait at 24, 25? Let's talk about scenarios where it's like, where the worst case, like, it can happen. All of us are short bias, and that, if anything, gives me more. I'll probably go. So at 25, you guys are potentially going to long it, or at 22, what are you guys thinking? If it happens, what scenario?
I probably won't be longing that name again. That's end of.
Jack, same thing for you. You're not going to be longing it unless it's 24, 25.
Probably not. I think it needs more time to consolidate. I think everything's gonna fucking flush hard as fuck tomorrow, honestly. Because everything is, I don't know, just kind of what I'm feeling in my gut. But yeah, if this thing consolidated for another like 1-2 weeks or whatever, and then somehow it manages to put in a good green daily candlestick to 25, then maybe it could go to 50. But
yeah, but like on the topic of needs more time, bring up DXYZ.
But yeah, if in like next 2 days, and I'm in agreement with you that there's gonna fade, and I said I'm still short. But in the next 2 days, if it goes to 25, would you leave it alone, or would you still like this is worth a long risk reward?
I wouldn't touch it at 25. It's just like RGTI or QBTS. I know RGTI broke out over 12, but it's not the kind of breakout that I like because it's so fast. And usually those breakouts fail. Like QBTS failed on the breakout on Friday, in my opinion, because it happened so fucking fast. Like you're basically buying a bounce from 6 all the way up to 10, and there's no consolidations. Where the best breakout on that stock was at 4 because it consolidated for a week and a half, and that was the best. The next day it went up and then trapped.
Can you bring up QUBT and DXYZ side by side on the daily? Because you've got those two charts there. Are they like connected? Are they?
Yeah, they're connected. DXYZ, you mean?
So I mean, yeah, you've already drawn the flag, but you see the difference between QUBT and DXYZ, right?
Yeah.
Like that DXYZ move from 10 is huge, but there's a big difference between like that 2 weeks of sideways and what QUBT looks like currently. So like I would buy QUBT again, of course. I don't have a strong bias on it to that extent, but it's nowhere near ready.
Did you guys buy DXYZ?
Yeah, I did, but I only day traded it, which turned out to be a mistake, obviously. But
I did really good on DXYZ. I bought it. I day traded it to get a feel for it on the initial run. I should have been thinking that it was going to spike into the election because of Elon and Elon's involvement in the Trump campaign. But I just kind of took some scalps on it, and then I shorted it on the top day, and I held it overnight. And then I covered the next day, and then I left it alone. I probably took a couple more scalps on it, but nothing major. But then that one day that it had that green candlestick towards 46, I got long. The zoom in.
This one?
Yeah, that candlestick is where I got long, and I bought that one towards market open at 44.45 because you could see that the day prior had a low volume hammer candle, and on a lot of the good breakouts, the low volume handle hammers give you an idea that the breakout is gonna at least test because it's consolidating at the highs, and on a lot of other examples you'll see that same exact low vol pattern. So I got long that one at 45, 46. I think it was like 20,000 shares, and I peeled some back into the immediate spike into 45, 46, 47, and then it dipped back into the close or whatever. Then I added back, took it overnight, and then the next day I sold some more and then kind of rebought it again, and then I fucked up the last day. I was long 20K from 48 or 49 average after locking some in, and then I just fucking sold it right at market open in the mid 50s, and then it went to my target at 75, and I cried.
Oh wow.
Yep.
Was the price therapeutic?
It was good. Then I shorted it the next day when it gapped up and made some money on that, but I didn't fill a lot of size because it was weird how it dumped. But I made a little bit of money on it.
Yeah, it's a very tricky stock to trade, I think. Like, that daily is super clean. Like, it doesn't get much cleaner than that, but the actual intraday price action, Jesus.
It's very illiquid too, so when you're sitting with big size, you're always worried that it's going to panic $5 a share to one stuff, the other than a umbrella.
Every time you try and hit in or out, the spread widens.
Mm-hmm.
I have another question. If you see like a really good breakout on the daily level, but the breakout happens pre-market, would you buy it or would you wait for the open?
I'll just fucking get in there no matter what. That's the thing. The edge, I don't think, is in where you enter or how you enter. And I think that's a lot of the questions that's been asked. But I think the real edge is just identifying what's working and how it's working, and just doesn't matter how the fuck you get it. You can get it in pre-market. You could get it at 4 a.m. You could get it at 6 a.m., 8 a.m., 9 a.m., 11 a.m. It doesn't matter when you get it. Just get the fuck in and hold it for as long as you can. That's it. That's my opinion.
Yeah, no, I agree with that. And to that point as well, like, a lot of the edge, I mean, I'm sure you've noticed, like, often comes from overnight, which is kind of annoying. I mean, DXYZ is a good example, right? Like, I brought the breakout, but due to being like scared for no reason, I day traded it, thinking it could have an overnight filing or whatever. And as a result, you know, I did get back in on the big day that it went from 50-ish to 70, but like, if I'd had the original size with the original risk, I would have just been sitting pretty and held. Like, a lot of edge can come pre-market overnight. Even like Friday after hours, like, offers some really good spots sometimes. Like Rum recently was super delayed on the Tether investment, and you could have been in like huge size from $8-ish. You just held. RUM.
Rumble.
Oh, okay.
Yeah. It gave so much time in Friday after hours to get in. So that's an instance where the edge was after hours. Yeah, it was still buyable at the open the next day at $10, but man, if you were in from Friday after hours, like,
Can you guys restate your point? You guys made an interesting thing. You guys mentioned the edge is not from entry exit. It's more about what's working, what's not working. Is that what you guys were saying?
That's what I was saying. I don't know how Mango feels, but
yeah, I think that's I don't know. Edge comes from a lot of things.
I like what Jack said though, because like, for so many years I was so obsessed over having like such great like entries and stuff. But the thing is, if you're doing a good job of selecting really good risk reward setups, you don't really have to care too much about where you're getting in, you know? That's something that took me a long time to learn.
I think everybody starts doing that though, because when I first started, I always wanted the perfect entry and the perfect exit. I wanted my arrow to look super pretty, but that doesn't fucking matter at the end of the day. What matters is how much fucking size are you getting in? How convicted are you? How long can you hold? And how tight is your wrist? That's all that matters. Like, for example, on LES on Friday, you could have shorted it at, there was a lot of different spots where you could have quantified a short sell opportunity on that stock. You could have shorted it in the pre-market. You could have shorted it on the morning spike. Could have shorted it after it went below VWAP the first time. You could have shorted it on the clear out at 11. You could have shorted it on the low of the day. But what matters is, where can you personally get the most size with the best risk level that's going to keep you the most convicted? And that's a personal question for you, I think.
Did you guys trade this one to the long side too?
That one, I never fucking bought it because they made it so gay at $2 when it had no range on the intraday that I just never thought it was going to speed up and do this because it traded. So if you look at the candlesticks at between 1 and 2, the range on the intraday was never big. It never really moved that much. It was like 50 cents max. So for me to see the stock go from 350 all the way up to $11 in a few days, it changed its behavior. And that is something that isn't as predictable to me than other stocks that already show its hand, and then like a QUBT or a DXYZ. They've already DXYZ showed its hand last year when it went from 20 to 120 and played out the clean candlesticks. So with LESE, I can't find any conviction that that stock's going to go to 11 to buy it long. But once again, another clean breakout at 350. If you're buying the hot stocks on the breakouts, that is the best edge right now in this market. And it's going to change. It's going to change eventually. I don't know. It could change tomorrow. It could change in 2 months. It could change in 6 months. You don't know when it's going to change.
So Jack, how do you know when you're gonna change your strategy? Don't you have to pick a few hits and then they gotta change this by the breakout?
Yeah, it's just through your P&L and through trading. Eventually you just keep winning, and then you're gonna start losing. And sometimes it's a fake loss, and then it continues higher and higher. Or sometimes it's a loss, and then you lose more, and then you're like, fuck, okay, I gotta do something. You know?
Change your entire setup or your
Entire playbook changes. Fuck.
So to that point, because I vary strategies a lot, you get a lot of clues from the tape itself. Like for example, LAES on Friday. I mean, I haven't been trading, so take this with a grain of salt. But like, if that had completely shit the bed to like $4, which isn't too unreasonable for that stock, then that would tell you that potentially shorting in general is back on the menu, right? But instead, it found what looks like some infinity bid in the $8 region, and then just held. Like, that's clearly a warning to, shorts are kind of working, but like not incredibly well. So you're going to pick up like eventually, and you're going to get paralysis by analysis, of course, but eventually you're just going to pick up these clues that are going to, sway you one way or the other between like trend, mean reversion, etc.
Yeah.
My brain's just, I'm like, wow, boggled. For me, if I have to change playbooks, like I have a playbook when I long on multi-day runners, I call it strong offering, where basically when they finance it in terms of percent, if the stock went from $1 to $8 in a week, and then do an offering at like $6, and it's like 30-40% of the market cap. In a nutshell, that's a strong offering. So I'm gonna long that. But my playbook doesn't change, so I'm like always majority short seller.
One thing which might help you a little bit is to just like mean reversion and trend are basically like the only two ways to trade, right? But then within those two, you have like there's many subsets of things, and all it is like a pendulum or whatever that swings back and forth between them, like cycles or whatever, and then a good trend trade might be by the dip, which is actually a mean reversion trade within a trend trade. So like you don't have to be like super competent to be able to utilize like some mean reversion skills to buy the dip within a trend, if that kind of makes sense.
Man,
That's what's working right now. That's what worked in 2020 too. If a stock goes down and it's its shorts are winning for 5, 10, 15%, buy the fucking dip. They're going to get blown the fuck all the way back every single time. And it's the same thing that happened in 2020. It's just, that's what's working right now is all these stocks just have a nonstop bid. Look at LES from fucking 50 cents to $11. Look at all of these stocks, DXYZ, QUBT, QBTS, even fucking Tesla and all these fucking names, they just keep going up. And it's driving people fucking crazy. And it's driving me, it's SOUN, you know what I mean? RGTI. But they just keep fucking going up, and you got to respect it. At some point, you got to respect it and identify that's the trend right now. And then at some point, it's going to change where it's going to start downtrending or start consolidating, and it's not going to be buy the dip every time.
Yeah, and like to that point as well, like if you look at LAES, like it just puked from $11 to $8, and like you scroll across, that's where it held support in the previous day, and it just puked $3. If there's ever a spot to try buy the dip, that seems like a reasonable spot, especially once it holds the first time. As we're saying, like if shorts are working, like it'll just roll over there and you stop out, and it's no big deal.
It's when the dip buyers keep getting crushed. Like it dips and then it bounces a little and then it goes lower. It bounces and then it goes lower. I've been on both sides of the equation. I've been the fucking dip buyer at mRNA at fucking $420 per share. And then it goes down fucking lower, 380, 360, 350, and then that was the top of the market. You know what I mean? At some point when the dip buyers don't get an exit, that's when the market's changing. On LES, the dip buyers got another exit. If they bought it at 7 or 8, they could have sold it at 9, 10, and they could have made money. You know what I mean? At what point do the dip buyers stop losing money? That's when the market changes trends. As of now, the last 3-4 weeks, the dip buyers keep making fucking money. And the shorts keep losing. Like I know one of my friends who's like a big fundamental short on QUBT on a lot of these, they just keep fucking getting run over. They keep fucking losing. They're fucking so much money they're losing. One of my friends was short QUBT at $17 per share with 200,000 shares, rode it all the way up to 28, is down 2 million. And then the next day it dumped, got out for a profit, and then did the same thing, shorted it fucking on 17, 18 again with a huge size, and then fucking took another huge loss when it went up to 21, 22 and actually stopped out this time. The more that they lose, the closer we are to the market shift and sediment, the closer we are to the shorting starting to work, because we all know QUBT is a dog shit company. We all know RGTI, LES, these are all dog shit companies, but they're going to continue to go up if there is infinity bid, if there is a hot market and a hot theme that continues to trend up.
I'm surprised you guys are not burned out. We've been going for a while. Anything else?
No, that's it.
Okay. Do we have who wants? Thank you, Jack and Mango. That was very, very cool, insightful. Is there anything else, Martin, JJ? Do you guys want to go over anything?
Not me. No, I think most was said, and I have to say a lot of what Jack said resonated with me today, because I was 95% on the short side this year, and it would have been a lot easier on the long side, looking back the past few months. And often I found myself fighting certain tickers, especially multi-day runners, sometimes also day one gappers. But yeah, I already had it on my to-do list to build a long playbook for next year, similar like Ben. But what Jack said, that our job is to find the easiest trade that currently works right now, really resonated a lot, and I'm gonna look for ways to implement that going forward.
Anybody else wants to bring? Because I think it was a really good session. I enjoyed it. I hope you guys did. Anybody else wants to say any last final words before we wrap it up? Do you guys want to continue, or you guys feel like? Because I want to give you guys a little bit of, so we keep doing this every Sunday.
What, Martin or Calvin, do you guys want to go over your basically 2024 setups and what you're looking for 2025?
Yeah, I will make it quick. My best and favorite setup in 2024 was the day one micro cap gapper that will most likely do dilution on day one or day two, be it an intraday offering or be it some exercise of warrants or any convertibles. Similar what you said, JJ. This was my favorite setup this year, and I try to catch it near the open, either on a maybe sometimes even pre-market or after an initial clear out after the open, which would be my perfect setup if it could do a pre-market clear out or any form of clear out the first 10-15 minutes, and then from there just downhill the rest of the day. This was my favorite setup with micro caps. And mid and big caps, I really liked this overextended multi-day runners. Lately we had SOUN a week ago on Friday, where it dumps from 20, 23, 24 down to 70 or down to 18, usually in combination with an option de-hedging, where the call sellers are unloading their hedges, and then it's a straight fade, similar like MSTR and the big setups we had 3-4 of these this year. That's my favorite, or that was my favorite setup in 2024. And the goal for 2025, I already mentioned, is developing a long playbook and getting more systematic with my sizing.
That's one of my favorite things too, Martin, by the way. It's not actually offering. It's actually when dilution happens. I think offering, I always get more effed on. But if a company has like 3 months of cash or 1 month of cash, and you know the ATM or the warrants just came into the money, that's a way sexier edge for me than an offering, because these guys are such dickheads. They can do day two, but if they're already dumping the offer, they're already dumping the overhead. That's just, it doesn't matter what anybody thinks, whatever, because you have on one side you have longs, you have shorts and dilution all combined, and on the other side you have like retail buyers, so they're doubling, tripling the float. Good luck like trying to squeeze that. So those are, I found that distinction, and that actually helped improve my drawdowns really big now. JJ, just a heads up. That really actually really my P&L overall when I stopped anticipating the values. I mean, I would have a risk on, like if I were to distinguish between putting on a 3R risk in the morning versus if I had to put, I chose doing 3R risk in the morning on an offering, potential offering, versus on a name that has dilution, and that's just come into play just today because of the gap up. That should deserve more risk play that's just purely on offering that has no dilution.
Yeah, I mean, so for me, it's not really like that I have to catch the offering. That the thing about when I'm talking about negative catalysts is it's the threat of the catalysts is what causes the fade. It's not actually the catalyst itself, because if a negative headline could come out at any minute, it deters people from buying. And on top of that, the people who are buying the offering are trying to build a huge short position ahead of time. If you look at all the offerings minus the quantum computing offerings, you're not going to find a single one closed green, and even if the offering didn't happen for like a week or two later, if there was an offering looming, that's enough. It's a threat of all.
From my reflection, I looked back at multiple years of my trading. A lot of my losses came from anticipation. One was anticipating the news, whether it's negative catalyst, or the other one was like, this is definitive. You could tell definitively that they're dumping the shares, because it's like how heavy it is and the volume dry. Have you seen the setup, JJ, where it's like a lot of volume comes in within the first half hour, and then after the volume dries up, I'm sure you've seen charts like that.
Yeah.
And then you have dilution there. So one aspect is you're anticipating a negative catalyst, whether it's an offering, whatever it is. Another one is definitively they're just dumping the shares. That triumphs. That deserves allocation of risk more than any.
Yeah, I mean, I'd say it's both. It really just depends on the context. It depends on the context of like if it's in the money, if they've done it before, for example. Like there's certain scenarios like with Armistice, like there's times where they fuck around with it, but then there's a lot of stocks where they don't. There's a lot of context involved. And as you know, like the ticker specific history makes a big difference too. How the tickers behaved in the past. Also the underwriter, like if you look at all the offerings that Maxim does, those are going to give you a much harder time than the ones at like Ladenburg. That's like it's just context. It's not like really just like offering, no offering, dilution, no dilution.
Yeah. I found the biggest variable was the number of months of cash left. Anytime you're lurking into like 3 months or something, if the warrants and stuff just came effective and that's the only metric of dilution, and then I see confirmation of it on tape, if it's trading and it's red candles and it's like 2x, 3x what the flow outstanding shares is, and like, okay, something's happening. That's my 2 cents on it. Brother Calvin. Sorry, by the way, Calvin, I thought you guys were not.
Yeah, no worries. No, I kind of have the same similar thing as Martin, where for this year my best and biggest setup is day one gappers. And for my goals for 2025, I want to size up on my current playbook. Namely the gappers. And also expand into these mid cap, large cap runners. The way I'll kind of play them is I've been trying small side with them just this year, but I want to size up a little bit for next year. Is like I would try to sell calls on the way up. I'll sell some I'll do like credit spreads on the way up, and then usually if these fail on like a Friday, I'll buy some puts, or I buy some puts at the open just to anticipate the failure. And the main reason is what I kind of notice is that if these fail, and if I get like 10 to 1 R or like 14 to 1 R on these setups, if you fail on a Thursday, you can get around like 4 to 1 to 5 to 1. So yeah, so up until the fail days, I would just be selling on call and doing credit spreads, and then on like either Thursday or Friday if they actually get there, I'll look to do some puts, buy some puts, and take it for the ride down. And yeah, no, I feel like with options on these trades, they give you like really skewed odds. Maybe because like the winner of it is super high, but also like with through option, the risk to reward of it is super high as well. I do see them as like a top op, and we've been able to see like 4 or 5 or 6 of them happen like this year, and so we can use those as examples into 2025. And it seems like all the big creators they've had like what's it called, the biggest P&L all for these runners as well, and so I am looking to add them to my playbook and test them out. But yeah, those are my goals for
And to be fully elbowed, right?
maybe. Yeah, also up there like that's also one thing, the open interest. I've been taking a look into that, and it seems like if you sell calls against those open interests, they just tend to expire worthless. You exceeds it by about like a little bit. But on Friday during OPEX auction expiry day, it's just it tends to tank underneath it. So
If I had time with Flash Research after we do our scanner, I want to create I think it's one of the best. I think it might help Jack Kellogg and Mango with their setup variables. Open interest these are like animals of their own, because they're essentially their goal. Like on if these guys like on AMC when it was fading, you would see like 1,000 open interest, and then they're on like a certain dollar, 80,000. So when it gets to that 80,000, let's say if the stock was at $4, $5 at the $3 $4, at $5 you would see 80,000. So 1,000. That 80,000 open interest, the person on the other side, and it's like 1 day, 2 day expiry, he's has like he knows he will make a certain. It's like almost an art on its own. He has to make sure that the stock fades or stays below that level, and they can get creative with it, because like if it's right, whatever, he'll make like 1 mil, 2 mil, and they just farm it all the way down. So I think one time what they do is sometimes they like basically they're the ones that are pushing it down to that level. So yeah, very often, large part of the times, they're the guys that will work against it. But when it goes on the opposite side, you could also, when you pay attention to that variable, in my opinion, you can also see when they're getting squeezed, so they have to.
yeah.
But very often, exactly like you mentioned, and I noticed that too, when that when the discrepancy is very high, like 20 to 1 or something like that, usually it goes $1 or $2 above, whether that's hedging, whatever, and they de-risk, de-hedge, and you smack it all the way down and put on a short to make up for jazz, etc. But they're very, very powerful in terms of lowers. Very powerful when it's 20 to 1. Maybe we'll make a scanner out of it. Make a bot when Shade lined it. I think a beautiful session today. Went much longer than anticipated. Nobody else has any questions. I think call it a day. Much bigger than our usual 1 hour, but it was worth it. Bigger end. And maybe for the guys that are new, we could also have another one and be more detailed about our thing if we feel that but hopefully all of it was really useful. Thank you, Jack. Thank you, Mango, for coming and staying till the end. Freaking warriors, beautiful mindset.
Yeah, fun to be here. Cheers for the chat, guys.
Yeah, it was fun.
I'm surprised. I'm happy. You have study sessions like this on sometimes, and is it this long? Mango and Jack?
I not really. I chat with guys in like my pod quite a bit. But not this level of review.
Yeah, I don't do too much of this either, but I didn't have a lot going on today, so just drinking a couple of beers and fucking thinking, I love to think.
What are you thinking about, bro? I feel like I could. What are you thinking about?
What I'm thinking about is all the fucking money I could have made this year if I fucking was more smart. Fuck.
I think there's a fine balance between being grateful and like always want.
Yeah.
But you have a performance coach, right? You have all these things. You guys talk about that?
Yeah. No, I'm very grateful of everything. I'm just always trying to get better. As of right now, like I'm gonna fuck off in the summer for sure. But right now I'm just trying to maximize this market for what it is, because there's so many opportunities, and you can make years of gains in a few months in this market, in my opinion, compared to other fucking markets that are shit.
Personally, I'm waiting for maybe in a few weeks, probably weeks, some months until everything dies down. I'm gonna make money on the downside. I had a fun conversation with the CEO 2 days ago. That's a fund manager, and all these guys, these names, you know what they go up because these dickheads they have these aggressive gold ETFs that they sell to retail investors, and they're always like, oh look, it's up 18%, up 40%. He's trying to sell me on it. I mean, he's a nice guy, but it's just he didn't want to open it up, but I told him to open up his aggressive book. He's like, in the past, what did he say? 18%, I think, in the consistently year over year for the past like 5 years. And then he opened it up. Long and behold, it's all the meme coins and the MSTR. It's like, it was equities, but it was a combination of that. So I was like, holy smokes. And then when I asked for a 20-year return, he's like, we can't do that because we separate the books. Long story short, when shit fails, when the ETF, they sell it to the investors and they sell it to you on the basis that it's individualized to you based on the things you fill out. And when stuff fails, they say, oh, this was your risk parameter. And then they just let go of this this playbook and they just separate it off so it doesn't show part of it. It's crazy. But yeah, thank you for coming. If you guys want to come in, usually we go more into our trades. This is our entry, this is our exit, this is the setup, market sentiment and all that jazz. A lot more actionable steps. So the next day we go in, next week we go in thinking, okay, these were potential macro setups that have been working, these are macro setups or not, and all that jazz. So thank you guys for outlasting everybody else, being at the end. I enjoyed it. It's always fun for me. So
yeah. Cool. All right, guys. Have a good rest of your Sunday. Chill out for a bit, and then let's get some blood for Monday.
Yes, sir. Happy New Year. Happy New Year, brothers. Later. If you guys made it this far, that means you liked it, you enjoyed it. Thumbs up. Ask a question. If you are a 7-figure trader, at one point if you made 7 figures and you're interested, feel free to reach out. Don't get scammed. We don't sell crypto. Don't ask us. If somebody's asking you to send money and stuff like that, don't do that. Have a wonderful, beautiful day. Take care.